As many of you no doubt know, the housing market is still struggling from the recession, and it's hard for some people to decide whether to rent or to own.
But there are a few things to consider that could make your final decision perhaps a little easier. Fox 29's Roxanne Stein is joining us now with our expert on such tips to give us some more details. Rox?
There's a lot to think about. Even though this past week the Fed announced interest rates on home mortgage have dropped even more, the average U.S. rate on a 30-year mortgage is now at a new record low of 3.67%. The 15-year mortgage is at 2.94%. Who actually, though, qualifies for a loan with such amazing rates? And what about the equity and the earnings on your investment if you decide you do want to buy a home? These are all questions you should be asking yourself if you're deciding whether you want to buy or if you want to consider renting. So let's talk about this with our Fox 29 common sense lawyer, Shari Olefson. Thank you so much for being here.
Good morning.
You say buy versus rent, the answer, or it used to be a dur.
Right.
You know what you're going to do.
Right.
But with mortgage rates, I mean, I paid 14% back in the 80s on a mortgage. I mean, these are giveaway money rates in mortgage terms.
It is.
So what do you consider if you're thinking about buying versus renting?
Well, that's sort of the question of the day, and it's also a question we want to revisit every 6 months or so as the market continues to change. But there are four primary factors that we look at, one of which is, of course, interest rate, but we also want to look at home prices, we want to look at the cost to rent, and we also want to look at what else we can be doing with that money, where else we might be investing it if we don't invest it in a home. And because a home is a long-term investment, we want to look at those four factors now, as well as in the future, what we expect the trends for them to be. So of course, interest rate is one big factor. And if you've ever bought a home, Roxanne, you know from looking at that Reg Z disclosure that you sign at the closing table or from your amortization schedule that you may very well spend 2 or 3 times the amount that you spend on your home on the loan itself because the interest is so high over the full term. But one of the things we've all learned to do to cope with our sort of bad borrowing habits is to really just focus on the payment. We don't focus as much on the interest. So probably these new interest rates are not on their own going to drive hordes of people out to buy new homes right now. Also because rates have been low for so long that anyone who was going to do that probably already did. Now the reverse is not true. If rates go up, it might have a chilling effect, but these low interest rates alone are not going to do it. Plus, as you said, a lot of people can't qualify for these really great rates.
You've got to have a stellar credit rating,
great
don't you?
Credit, and also a sizable down payment.
To qualify. Now, there's also, and we've talked about this in past segments, home values have not climbed. In fact, in many cases, they're still dropping.
Right.
Is that the case, and should a prospective home buyer be thinking about that?
Well, we have talked about that, and one of the things that we've concluded is that you really need to look at your own specific micro market. In the United States in general, home prices will go down another 2 or 3% this year. In Florida, it'll be more like 5, 6, or 7%. But in many markets in Florida, we've used Miami Beach as an example, some of the waterfront communities, prices are already going up. So you really need to look at the price trend in the specific neighborhood that you're looking at. The other thing to remember in terms of a home is it's only part investment. It's part consumable too. You're going to use the home. So you're going to have to live somewhere. So it's just like if you were buying a car, you wouldn't wait for the price of your car to bottom, or if you were buying a new pair of shoes and you needed shoes, you wouldn't wait for the prices of shoes to bottom. You need a home. And of course, it's a long-term investment, and renting, as we said, is 0 return on investment. It's interesting, though, that in today's market, the price of homes is one thing and what's going to happen to them, but what's actually driving a lot of people to buy rather than rent is the cost of renting. Because rental rates, there are millions of new renters added into the rental pools now. Most of these rentals are being purchased by investors who are going to keep raising the rents because they want to make as much money as they can. They're buying for their return on the investment. So a lot of people are going to find that if they want to stabilize their cost of living, they're going to have to buy rather than rent, which is an interesting dynamic we've really never seen before.
I was going to say this is new landscape. This is new territory. Now, you talked about return on investment.
Right.
People who rent, and you mentioned this before, what else can you be doing with your money? Maybe if you want to rent, you're going to take that chunk of change that you'd use as a down payment or even overall for interest on a house and everything else through the years and invest it in something else. What about doing that?
That's an interesting question. And the flip side of low rates to borrow is, unfortunately, low rates to invest. So you're not going to get a great return on that money if you put it in CDs or a money market fund. If you happen to be a renter who's very self-disciplined and very knowledgeable about the stock markets or other investments, that may make sense. But historically, for most people, most folks who rent are not investing that extra money someplace else. And again, like I said, the cost of renting right now is actually higher than the cost of owning. We have what we call a rent to own ratio. And when the cost to own a home it goes below 15 to 17%, I mean, it's 15 to 17 times your annual rental amount, that indicates that it's time to buy. And in most markets, that ratio now favors buying.
So bottom line is, if you can, and you can get that low interest
definitely
rate,
take advantage of it. And the other thing is we're rewriting a lot of the rules. It may actually get harder to borrow in the next couple of years. So anyone who's thinking about it may want to pull the trigger now.
Time to go. Thank you, Shari, for all the info.
Sure.
Over to the anchor desk.